Hi, welcome to the first video tutorial about challenges in Learn Double Entry. Once you log in on Learn Double Entry website, you will see that by clicking on the challenges menu here, you won't have any challenge, but there is a list of public exercises you can try. So here we have a first list of exercises based on the work by Jeffrey Franklin, Principles of Accounting. So we start with the exercise number 1, which is about basic transactions. We can get invited to the challenge. Once invited, we can start the challenge and then begin our work here. We have a hint here that we should fork a firm called ACCT 201, which is a basic firm with a basic chart of accounts. So just click here and we have to accept the terms and fork it. To fork a firm means basically to duplicate it, but by keeping a link to the original one. So here we have the exercise. The exercise has a description here, and then several transactions to record. For each transactions, for each of the transaction, you can just see here that you can do basically 4 different operations, which are prepare a new journal entry, or use a template to prepare a journal entry, or use a closing entry, prepare a closing entry. And the last one is to declare that the transaction does not need a journal entry. So let's start. Transactions A, letter A. A 2-year lease was signed. Actually, this is exactly one point in which we don't need a journal entry to be recorded, to be prepared. So we just click here and we have a confirmation that our opinion was correct. A 2-year lease was signed. We don't need a journal entry for this. Here, Lions and Tigers deposits $20,000 in cash to the bank account, and the money was exchanged for common stock. Yes, we have to record here, definitely. So we click on the new journal entry icon here, and we can put the date here, and we have to check whether the date is correct. We can, for instance, here we have the 2nd of November. No, we have the 1st of November here for this transaction, and we have to write here the description, initial setup of the firm. And here we have to state which are the accounts to be debited or credited. And if we don't know exactly, we can just have a look on the chart of accounts and see that we have cash and common stock. So we have cash, which is an asset, which is a current asset actually. So we can just select cash here for $20,000. And on the other side, we can do the same, but we have to go to the shareholders equity section and to choose common stock. Here, instead of typing again $20,000, we can just press the equal button on the keyboard, on the equal key, and we have the amount written here. Let's suppose that we put a wrong figure here, like 1000 and 1000, which is not correct, just to check what happens. If we click on save, we will be shown that there are some errors on our journal entry. So we have a wrong amount for posting 1 and wrong amount for posting 2, because it was expected at $20,000 value here and here. And so if we want to correct this journal entry, you see, we have it already here. If we wanted, we could also click here to go to edit the journal entry, to correct the journal entry here. And we have just to correct the number, put again 20,000 here and here, and we can save. So we can see that the second transaction is correct. An interesting thing here is that we can, for each journal entry that we record, we can have a transaction analysis where we can find a description of what we did, what we recorded. And so we have cash, which is an asset that increased the value for $20,000, and common stock, which belongs to the group liabilities and equity, which also increased for $20,000. So this could be interesting to understand better the things. So the transaction letter C here says that the owners of the company paid $500 cash to this company, Redmond's Property Rentals, for November's rent. So we just click here and say that payment of rent is rent is a description of what happened. The date, well, let's keep the wrong date here for a moment just to show. And here we can start beginning that thinking that cash is something that for sure decreased. You saw that instead of clicking here and choosing cash as I did before, I could just write here cash, and I was proposed this way a list of the accounts that contain the word cash in them. So cash is on the credit side this time because money went out from cash, and on this side we can choose what we have, and it is an expense, so it is a rent expense, so we can choose rent expense. And also here we can just press the equal key on the keyboard and to have the number here. Since usually accountants prefer to have debit values before credit values, here there is an icon where you can click to have the things in the correct order. So if we save it now, everything appears correct, apart from the date. Let's just see what happens. And actually say, yeah, the journal entry 1 has a wrong date. This is what it was expected, and this was what was found. So we just have to correct the date here and click on save, and everything looks fine, everything green. Okay, so you can just go and move forward for the other transactions. I wanted just to show you that in each moment you can have a look at the journal as it is going in. So you have two transactions. The yellow one here is the one connected to the current transaction. So you have this kind of connection between a transaction and a journal entry. Another interesting thing is that you can have a general ledger, and with the general ledger you have the list of the accounts, and for each account you have somehow the T account. Okay, so Thank you for listening and welcome to Learn Double Entry.